Hello everyone and welcome back to my channel. Today we are diving into Meta's latest Q3 2025 earnings report, and wow, the market didn't like it. The stock dropped more than 10% right after the results. But here is the interesting part. Meta actually beat expectation on revenue, and this is something good. But why did the stock tank so hard? In this video we'll break down the real reasons behind the crash, the numbers that matter, and what it all means for the Meta's future. If you like my content and my video, please help me with a like and a subscribe. Thank you. So, in terms of expectations, before the report came out, Wall Street was optimistic. Analysts expected around $49.4 billion in revenue and earnings per share close to $6.70. Meta had been one of the best performing tech stocks of the year, up about 40%. A lot of that optimism came from its strong ad revenue and its massive investments in artificial intelligence. Still, there were concerns about one thing, and this is spending. Meta has been pouring money into infrastructure, servers, and AI data centers. Investors were wondering, how long can that level of spending continue before it starts hurting profits? Now, speaking about the results, when Meta released its results on October 29, revenue came in at $51.2 billion. That's a solid beat, up 26% year over year, but earnings per share were only $1.05, and that is something that shocked the investors. On paper, it looked like Meta's profit had collapsed, but there is more to the story, something hidden in the fine print. Now, speaking about one of the big problems, this was related to the tax charge. That huge earnings drop came from one-time non-cash tax valuation charge of $15.9 billion. This was caused by new US tax legislation, the so-called One Big Beautiful Bill. It pushed Meta's effective tax rate to 87% this quarter. If you remove that charge, adjusted earnings per share would have been about $7.25, which is actually above what analysts expected. So the business didn't really collapse, it just took a massive accounting hit. Looking at the core business performance, underneath that headline number, Meta's fundamentals still look strong. Operating income was over $20 billion with margins around 40%. Ad impressions grew 14% and the average price per ad rose 10%. That combination means demand for Meta's ad product is still solid. Daily active users across all apps reached 3.54 billion. That's 8% growth year over year. So despite competition from TikTok and YouTube Shorts, Meta continues to dominate global attention. But the problem is related to the cost, is related to the rising cost. Total expenses jump 32% year over year, reaching more than $30 billion. Capital expenditure alone were $19.3 billion, and Meta raised its full year guidance to 70 to 72 billion in capex, and this is a record. Most of that is going into AI infrastructure, data centers, GPUs, and the massive computing clusters needed to train the new models. That level of spending has investors nervous, and this maybe can be a problem for the future. Also, the other thing is related to the AI ambitions, because Mark Zuckerberg called this a fundamental year for Meta's AI future. The company is building Meta Superintelligence Lab, developing generative AI tools for creators and rolling out chatbots inside WhatsApp and Instagram. They also use AI heavily in ad targeting and in Reels recommendation. It's clear that Meta is betting everything on AI. But the question is, when will those billions in investments start turning into real profit? And the problem is that the investors didn't wait for the answer. In after hours trading, Meta stock dropped 7 to 9%, and by the next day it was down more than 10%. Wall Street hates surprises, and that $15 billion tax charge caught everyone off guard. Free cash flow fell to about $6.5 billion, roughly half of what it was in the previous quarter. Even though it was technically a one-time charge, the market's message was clear. Meta is spending a lot and patience might be running out. Now, when you compare Meta to its big tech peers, the picture is mixed. Alphabet operating margin is about 32%, Microsoft is about 43%, and Meta sits right in between at 40%. That's impressive given how much it's investing. But unlike Microsoft, Meta doesn't have enterprise cloud revenue to cushion the impact when ads slow down. Its entire business still relies heavily on digital advertising, which make it more vulnerable to economic shifts. Other issue is related to regulation and tax risks. There's also a bigger story behind that tax charge. Governments around the world are tightening rules on digital giants to make sure they pay more in global taxes. Meta's hit might be the first on several similar adjustments coming for other big tech companies. Even though it's a non-cash expensive, it's a reminder that regulation and tax policy can drastically reshape corporation earnings. This is an early warning sign of what could become a recurring theme in the next few years. And now, speaking about the future, what should investors next watch? First, the balance between the ad growth and the cost growth. Second, the return on AI investments, whether all that capex actually improves ad performance and engagements. Third, capex trend themselves. Are they peaking now, or will Meta spend even more next year? And finally, tax and the regulation risk. For Q4, Meta guided revenue between 56 and 59 billion dollars, which will be another record. If their AI tools start generating better monetization, Meta could surprise on the upside again. If you arrive until here, thank you for watching. And now speaking about the final part. In summary, Meta's Q3 report looked terrible at first glance, but underneath the business remains strong. The bad headline came from an accounting quirk, not an operation collapse. The real challenge is how fast Meta can turn its massive AI investments into tangible growth. If it succeeds, this quarter drop could be a long-term buying opportunity. If it fails, we might be looking at another expensive metaverse moment. So, what do you think? Is Meta $15 billion tax charge hit just noise or a red flag? Let me know in the comments, and don't forget to like this video, subscribe for more breakdowns, and I will see you in the next video. Thank you and bye.